Okay, so good day, class. So for today's topic, we will discuss investments. So we are now on the investment topic. So before we proceed with the investment topic, so let's define first what is a financial instrument. Okay, financial instrument, it's a contract that gives rise to a financial asset of one entity and a financial liability or equity instrument of another entity. So therefore, financial instrument is a contract between two parties wherein one party nagka-financial asset siya and other party nagka-financial liability siya or equity. So actually, financial asset, these parties, mo ni silang gitawag na investor and the issuing company or corporation. So, and it's a transaction between the investor and issuing corporation. Okay, so si investor, siya ang na-financial assets, issuing corporation, siya ang na financial liability or equity because of that contract between the two parties. So, what do you mean by, so here in investment, we are on the perspective of the investor. So, kita si investor dire, so we account as investor. So, since we are the investor, we have a financial asset based on the contract under financial instrument. So, what is financial asset? So, financial asset is any asset that is cash. So, cash is considered as financial asset. Second is a contractual right to receive cash or another financial asset. So, here, we have a financial asset if we have a right to receive cash from other parties or another financial asset from other parties. So basically, this refers to debt securities. If you say debt securities, di ba, we invest on bonds, we invest on debt. So kibalay, nagpautang ta. Diba? So we say debt securities, our relationship is we are the creditor here. So kita ang nagpautang, we invest on pautang. Okay, so therefore, because we invest on pautang, nagpautang ta, we have a contractual right to receive cash from the debtors, katong nangutang sa ato. Okay, next is you have contractual right to exchange financial instrument with another entity under conditions that are potentially favorable. Take note that the conditions are potentially favorable on our part. I think this is applicable for derivative contracts. We'll discuss that on the next discussion. Then last is financial asset is any asset that is an equity instrument of another entity. So, equity instrument siya of another entity. Therefore, if this refers to the equity securities. When you say equity securities, we invest on shares, we invest on stocks. Therefore, as an investor, we are considered as the shareholders. So, our investment for other company, they treat that as part of their shareholders' equity, di ba? Because it is an equity instrument of another entity. On our part, that's an investment when we purchase stocks, when we own shares or stocks for a certain corporation. On our part as investor, that is investment on our part. But on the perspective of the corporation, that is additional equity or investment for them or additional to their shareholders' equity. That is why equity securities. So why there is investment? What are the purposes nga mag-investment ta? Diba? So basically, investment, we invest, dahan pwede investan. We invest on shares, we invest on stocks, we invest on mga real properties. Diba? So there are a lot of purpose why we invest. And according to IASB, it defines investment as asset. It's an asset held by an entity for accretion of wealth through distributions such as interest, royalties, dividends, and rentals for capital appreciation or for other benefits to the investing entity such as those obtained through trading. So basically, we invest because we want to accumulate wealth, diba? We want income, we want to accumulate wealth. So that wealth could be from interest. So if you invest because you want to have interest, you want to accumulate wealth through interest, so that refers to debt securities. So ay, di ba? If we invest on debt, if magpautang ta, unsay return sa ato? Interest, income, di ba? So we receive interest sa kato atong gipautang nga security, or we receive interest for the debt securities, for the investment in debt. At the same time, Royalties, this is more on like kanang mga income ni siya sa mga composer, kanang mga franchise holder, franchise owners. So when you say dividends po, we invest because we want to accumulate wealth through dividends. So kakinsa applicable si dividends. So this is applicable to your equity securities because diba we invest in stocks, the return sa ato is generally the return if we invest on stocks is through dividends, diba? So the income is through dividends. So if we invest on stocks, we receive income in the form of dividends. And we also have for capital appreciation, when you sell capital appreciation or for rental, you invest for a certain property nga imo lang sa siyang uh, patulugon or paabangan lang nimo ang property but wala nimo gigamit for the operation, diba? So ginapa-appreciate lang nimo ang value. Example, you have a land, so nagulat lang ka for 10 years, di sana ko ibaligya. After 10 years na ko ibaligya because you know for sure that the value of the land mo appreciate din na siya, di ba? The only asset na it will not depreciate. Instead, it will appreciate its value. So that is investment property. So the purpose is you to appreciate the value of the property. That's why that refers to investment properties. These are properties na wala gigamit sa operations, gipatulog lang siya for rental or for capital appreciation para later on pwede mo sa ibaligya at a higher price. Or for other benefits to the investing entities such as those obtained through trading relationships. So, basically, you invest on kanang stocks kung nag-trade yun ka. So, this money siya, trading relationships. Aside from that, naputay purpose dire nga for ownership control. Di ba? You invest for ownership control. This also refers to equity securities. You invest on stocks para na kay control sa company or na kay significance influence sa company. At the same time, you have meeting business requirements. Purpose niya to meet business requirements, you invest for certain purpose. Like for example, nag-sinking fund ka or nag-establish ka og investment for plant expansion nga fund. So that is intended for your plant expansion. So you invest for the future plant expansion or you invest for kanang mga uh, future future plans for the entity. Also, you have protection. We invest for protection, 'di ba? This is very common nowadays, mga life insurances, 'di ba? So life insurance is a form of investment. 'Di ba? So investment on your part, 'di ba? In case ma-deads, 'di ba? Nana siya. So this insured ka, 'di ba? So that's an investment. That is a type of investment. So before we proceed with the discussion of the financial assets of the equity securities and debt securities, so our focus here is only the equity securities and debt securities. So investment in debt securities and investment in equity securities. So let's expound first the investment in equity securities. So if we invest on shares, if we invest on stocks, dagan pwede tawag sa imong investment because depending on the ownership, depending on how much you own or how much shares you own for that certain corporation. Okay, so what if you invest on stocks? Nani may tabo, you invest on shares or equity securities or stocks for a certain corporation, we need to ask some questions to identify what type of investment and what type of standard atong gamiton, di ba? In accounting the investment in equity securities. Okay, so first question is, if you invest on stocks, if you invest on shares for a certain corporation, do you have control? Is there control? Diba? When can you say nga naay control? So, if you own 51% or more of the shares for a certain corporation, if the ownership is 51% or more, then automatically you have the control for that corporation. When you say control, you have the power to decide. Diba? You have the power to decide, diba? To make decisions, to decide what type of policy to be used, diba? For the corporation. So if the answer, if you have control, yes, what type of investment? So your investment is called as investment in subsidiary. So investment in subsidiary and your investment in subsidiary account is accounted using IFRS 3 business combination standard. Okay. So next is, what if I don't have control? Diba? Less than 51% yung ownership. So if it's a no, there's another question, is there a joint control? So yung say joint control, diba? siguro daghan mo nga shareholders, gi-combine ninyo inyong shares, tapos naka-accumulate mo og 51% or more, di ba? So like butang na to, three shareholders nag-combine og shares, pag combine ninyo, di ba, nagka-joint control mo. So naka 51% or more mo after accumulating all your shares. So if the question is there a joint control? If the answer is yes, then your investment is accounted under IFRS 11 or the joint arrangement. So your investment is called investment in joint operation or investment in joint venture. So manitawag sa imong investment. So what if no, 'di ba? There is no joint control, 'di ba? So walay joint control, your ownership wala kay joint control na hitabo. If no, there's another last question. Is there a significant influence? Your ownership, kung imo bang ownership is, when can you say nga na significant influence? If your ownership is 20% to 50%. If you own 20% of all the shares up to 50%, therefore you have a significant influence. What do you mean by significant influence? You have influence for the policies, for the decisions of the board of director or for the corporation. Okay, so again, so it's different from control because when you say control, you have the power to decide. Here, you don't have the power to decide. You only have the influence. Okay, to participate in the decision making of the company, but you don't have the power to decide. So that is significant influence. So you have 20% to 50% ownership, therefore you have significant influence. Question, if yes, if I have significant influence, if my ownership is 20 to 50%, okay, how do we account your investments? Your investment is called investment in associate or accounted under IAS 28 standard. So that is investment in associate. What if no? There is no significant influence. So how do we account for the investment? So your investment is accounted under IFRS 9, which is financial instruments. Okay, in financial accounting and reporting, especially in intermediate accounting 1, we will only cover the investment in associate and the IFRS 9 financial instruments. Okay, the two IFRS 3 and IFRS 11 will be discussed in your higher accounting. Okay, so under this IFRS 9 financial instruments, since we invest on stocks, unsay return sa, di ba it's an investment, diba? So it's an investment, so unsay return sa ato if we invest on stocks under IFRS 9 financial instruments. Therefore, our return is called dividend income. Okay, so mo itong madawat sa atong investment. How about if our investment is under investment in associate? So unsay share nato, di ba? We invest because we want to accumulate wealth. Gusto ta magka-income. So unsay atong income if naka-investment in associate atong investment. So our share is share in profit or loss. So if there's a profit or loss for the corporation, then natay bahin ana. So that's under investment in associate. But under IFRS 9, only dividend income lang atong income ma-receive. Okay. By the way, investment is these are assets that not directly identified with operating activities. So dili sa directly identified, kumbaga dili sa part sa imong normal operations, di ba? Investment is dili pud sa part sa imong main generating activity o main income generating activity sa imong business. So investment lang, maybe you have spare nga mga cash or you have excess cash, di ba? So para dili sa ma-idle, we need to invest the cash, di ba? So i-divert nato ang cash nato nga di sa matulog lang, na as a return, di ba? To properly manage our assets. So those are investments. So this time we'll discuss first financial assets. We have equity securities and we have debt securities. Okay, again, equity securities under PFRS and IFRS 9, our return here is called dividend income, while if we invest on debt securities, nagpautang ta, we invest on debt. So our return here is called interest income. So man itong income. So our premise here is we will discuss the IFRS 9 or PFRS 9 classification first. Okay, so I will discuss first equity securities. Okay, financial asset under equity securities. So you have two types, or actually three classifications of investment. First is the unquoted investment. This is the classification under PFRS 9. You have unquoted financial asset or equity securities. You have financial asset at fair value through profit or loss. And you have financial asset fair value through other comprehensive income. Okay. Criteria. When can we say that the investment or the equity securities is classified as financial asset fair value through profit or loss, or fair value financial asset fair value through other comprehensive income? So here's the criteria. If the equity securities, if your investment is held for trading or what we call trading securities, okay, so the investment is classified as FBPL. The same time, if there's a revocable designation by option, or this is the fair value option, di ba, it is classified as financial asset fair value to profit or loss. And by consequence, quoted instrument, to if naka-quote siya, ang instruments nimo, automatic that is uh, classified as financial asset through fair value to profit or loss. How about financial asset FVOCI? When is the investment classified as FVOCI? So if there is a revocable election that not for trading siya, diba? If the investment is not for trading, so and it was elected to be classified under OCI, then we classify the investment under financial asset FV other comprehensive income. Okay, here, di ba, under here, how are we going to measure, di ba, the investment in equity securities? So we have classified already, FBPL ba siya or FVOCI siya. This time, how are we going to measure? So we have initial measurement, di ba? So upon purchase of the shares, that's the initial measurement, di ba? Nipalit ta og shares because we want to own shares. We invest on the corporation by purchasing the shares. So this is the initial measurement. So how are we going to measure what is the initial measurement of an equity securities under financial asset through profit or loss? So the initial measurement here is at fair value. While FVOCI, the initial measurement is the fair value plus transaction cost. Take note that transaction cost is added under FVOCI. Transaction cost, these are costs incurred by purchasing the shares. Okay, so these are the transactions costs incurred by purchasing the shares. Okay, so again, initial measurement for uh, equity securities under financial asset FBPL is at fair value, and under FDOCI is fair value plus the transaction cost. If you try to journalize the transaction, this is what will happen. This is your entry. So under FBPL, so you debit trading securities or financial assets under fair value through profit or loss. Then, if there is transaction cost, di ba, again, it's not part of the initial measurement of the investment. So, you debit it transaction cost because it is outright expense under financial asset fair value to profit or loss. So, you debit transaction cost, then you credit cash because you purchased the shares. Okay. Under FVOCI, you debit financial asset fair value through other comprehensive income, and you credit cash. So if there is transaction cost, the transaction cost is included in the amount of the investment. That is financial asset through other comprehensive income. So you debit FVOCI including the transaction cost, and you credit cash. So that is the difference between the two. So after initial measurement, so this time, how are we going to record to measure the investment subsequently? So you have subsequent measurement. So the subsequent measurement at the end of the year, okay, we need to subsequently measure the financial asset under profit or loss at fair value, and under FVOCI also at fair value.